Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. And on the heels of the Amy Coney Barrett Senate hearings this week, we are seeing a little bit of activity in the equities market. One thing we did want to mention, or Tori asked us to mention as he's not here this week, is right at recording last week, new milestone, 27 trillion national debt clock. Keep rolling forward, keep borrowing money.
And by the time this show airs tomorrow, it'll probably be 30.
Sure. Because, we got to get to like $1 trillion a day at some point. Have to.
So when do those numbers start to mean anything? I'm not sure. But jumping to the markets, I think we'll start with the transportation average.
It is the most interesting story this week.
It is, I think. It pushed to a new all-time high and has so far held that all-time high. Meanwhile, the industrial average has not yet broken to a new all-time high. And you'd call that a Dow theory failure.
Failure to confirm, or maybe it just hasn't yet.
Right. So we'll be watching the industrials to see if it wants to confirm a Dow theory bull market in the equity space.
Yeah, and I think it's reasonable to expect that, at least in the long run. I mean, I know we're coming up on the election here, and I expect everything to hit the fan accordingly, probably in November, December, especially with potential contested elections and everything else. And especially this week with more news, emails emerging potentially regarding Hunter Biden and some international relations there with Ukraine. So there's a lot of reasons for the markets to be in doubt. I think the Fed Reserve is having the only solution to that problem that they know, which is continue to print money. And with that going forward, why couldn't the Dow get to 50,000 and that doesn't mean anything? Or 100,000 and it doesn't mean anything? When do numbers actually stop meaning something? Is 27 trillion high enough, or do we have to get to like Octa Google or something, some number that doesn't exist?
Well, I think it would mean something. It would just mean high inflation, a lot of money that's not in existence right now coming into existence. And obviously that would hurt the dollar, which, turning to the dollar, we pointed out the slight break of the upward sloping trend line. And so far, as it broke below that, it came back up and tried to touch it and hasn't been able to get back above that with the dollar index. Still potential for the dollar index to rally here, putting downward pressure on the metals. We're hoping to see that. Not sure we will, but hoping to see that so that we can have some entry points with the metals a little lower. So with the metals, let's jump into the gold price.
Well, you've taken my charts away from me today because you've been flipping through them. So, Robert, how about for once you tell us what's going on with the gold price?
Yeah, it pushed above 1900 all the way past 1920 and then ran into the declining trend line that we had drawn on the chart and failed to actually touch that trend line, and then the next day sold off. Silver had a very similar action. It actually poked its head above that declining trend line and then formed a doji candle, and the next day was down. So we're going to be watching the metals closely as we get closer to the election. Expect volatility, big swings one way or another.
Yeah, it definitely seems, at least short term, as the dollar, despite making that break below the rising trend line, still looks short term bullish. So therefore, looking at the gold and silver charts, stair steps down, probably compressing down to an ultimate low, which will be the new floor that drives us to that next set of higher prices over the next 12, 18 months. I think we definitely expect to see gold, silver, other commodities, other metals come down leading into the election. A lot of volatility right around. Now, we don't know if we're going to hit some of these lower trend levels you may see on the chart here. I know we were talking earlier, I think both of us would love to see sub 1800 on gold because that's going to provide us a nice strong pullback in the gold price. And then who knows what the next high water mark is, 25, 27, before we start the cycle again and figure out where we're going to plant our feet for the next step up.
Yeah, I think that next step up is the one you don't want to miss. So we're hoping, again, if you've been listening to this show, then this is just kind of a repeat. But if you're a first-time listener, we're hoping to see the metals pull back a little bit more. That is the window of opportunity to get long before the next leg up. That next leg up is the one you do not want to miss. So if you're in the metals market, sit tight, going to see some volatility. If you are looking to add, then this is going to be your opportunity, because we've had the metals, both gold and silver, turn technically bullish in the last year and a half, And now this first pullback, it looks like it wants to zig down. It's already zigged down, it's coming back up. One last push down, that's it. Then you just want to be long.
Sure, and what you're talking about is the trend. That long-term trend.
The long-term trend is clearly bullish, and this first big pullback that we're seeing here, that's the time to get long.
Right, and we've explained in the past this concept of long-term trends, how they act in phases. And thankfully, because we haven't seen a rampant rise in gold price yet, we are still in the first phase, which is where you've confirmed that the market is definitely bullish in this case, or bearish on the other side. But in this case, definitely bullish. And now you're looking for entry points before, as Robert said, we hit that second phase, which is it's too late, the train's already moving. The manic phase of the market.
And we're headed there because the inflation-adjusted price for gold is around $2,800. So sitting around $1,900, you've got another $900 move in gold just to get to the government inflation price. Not to mention that usually markets overshoot, and so I'd expect it to overshoot as well eventually. But it's definitely that 2,800 number is going to be like a magnet pulling on gold to the north.
Right. Now, by government inflation price, you mean whatever the math equation is today?
That's always a good question. I mean, what is the inflation number? What's the government number for it? They did change the formula, I think, around Clinton's presidency, and so there are some pre-Clinton government formulas for inflation versus today's modern-day formula that, factors out things like food and energy, things we
things that
rarely
aren't,
use.
They're not expenses.
So
no one eats.
Just using that government and statistic for inflation, it's 2,800. That's going to be a magnet for gold.
Apparently, Robert eats.
So we hit the equities market, hit the dollar, hit gold and silver. Platinum,
what are those pesky
palladium?
other white metals doing?
One's undervalued, one's probably overvalued.
Yeah, arguably. It's almost like we just did a whole show about this a couple weeks ago.
Ah, we did.
Yeah, and if you haven't heard us mention platinum, meaning this is the first time you've ever listened to the show, welcome to the club. We're big fans, at least at this pricing. And I would go back a couple weeks. We had a special guest, Rob, on, who's been in the precious metals industry for about as long as I've been alive, just talking about the history and some of the usages of platinum. So very good show to go back to. Platinum, just like the other two metals, because palladium's going to be a different story, but just like gold and silver, platinum does similarly continue to look like it's stair-stepping down, at least in the short term. But if you stretch this chart out just back to like March and April after the fall, platinum still looks real bullish to me. We're looking at just barely scraping the 382 fib today, which we did break below slightly, but it bounced right back above. And I know when you were talking about the trend line with the dollar a minute ago, we're waiting to see if the dollar is going to be able to push above. Platinum did pretty aggressively. I think, like gold and silver, we are going to see platinum inch back down a little bit further. Where you stand?
Yeah, I like platinum here. I think it's been the laggard of the precious metals markets. Gold, silver, palladium have all clearly been bullish. Silver recently turning bullish. So platinum's lagging. It's been building a long base, and I think it's due. Some other reasons for it that we'll talk about in the next few shows. We'll continue to talk about platinum, obviously continue to talk about gold. So stay tuned. It's going to get fun.
And rounding out the metals, palladium acting more as an industrial metal than a currency hedge, as you tend to see gold and silver do, and platinum seems to be more in line with that also. Now, again, 2 weeks ago, we talked about some of the reasons why we think palladium skyrocketed in price compared to some of the other metals like its sister metals, platinum, and why we think we're going to see that reverse back to where platinum reclaims its pricing point over and above that of palladium. But palladium is compressing up. Compression up always makes me a little bit nervous because it just feels to me like they're cleaning out a lot of the bulls who may be putting in standing orders at lower prices. And then eventually when you break those lower end compression levels, like you can see on the chart here, there's not really a lot of standing futures or options contract orders waiting to pick that price back up. And you could end up seeing a couple $100 drop in palladium very quickly. So I don't see that happening anytime soon, but it's one of those things where if we do have a tumultuous season around the election where everything starts going haywire, and maybe you've got people kind of bailing on the markets in general, just getting out of positions, getting liquid, circling the wagons, waiting to see what happens, you could end up seeing something like palladium take a pretty substantial drop at that point. And now all of a sudden your price ratio by owning platinum, you just doubled your position, whether platinum goes up or not. Because it's not necessarily about the dollar price of something. It's about how much of something else you can get for it. And that's why we care about the ratios.
Yeah, and as much as we've been talking about platinum being a value based on those ratios, I want to make it clear that platinum's not replacing gold in your portfolio. Gold is a necessity to own in a portfolio. I think now, in this current environment, gold should make up a large chunk of your total portfolio, not just your metals portfolio, but a total portfolio. Gold should be kind of a ballast to the ship. It is necessary in your portfolio. So us talking about platinum, that's just a smaller part of a metals portfolio. Gold being the primary, and then at certain times, like now, you might want to own a little bit more silver than you would typically. But I think a balance between gold and silver, and then obviously platinum being the value. We're talking a lot about platinum and giving a lot of attention, but I think an investor can easily just own gold and do well, because that magnet on gold is going to be pulling $2,800 inflation price. Gold, I can confidently say, is going higher.
Yeah, I like that example, right? The ballast on the ship. So if gold's the ballast, then platinum's what, your fishnet? Because that's the thing that can reel in the catch when it happens, but gold's keeping you from drowning.
That does it this week for Golden Rule Radio. Thank you for listening. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvany Financial. Our website is mcilvany.com, and give us a call to talk about your portfolio, 800-525-9556. Thanks for listening. Have a great week.